Good morning and welcome to my daily report market videos on Thursday the 11th of July with me, Richard Perry, market analyst at Hantec. We've had a significant about turn again on the dollar, and that has come about from this congressional testimony by Jerome Powell. He came in pretty much more dovish than the market had been anticipating. There was a significant shift away from the dollar in response to that. Powell talked about the fact that the global slowdown was impacting the US economy going forward. Trade dispute was an issue, but also then focused on muted inflation pressures, and certainly it seemed as though he was setting the market up for rate cuts going forward. Now what we have seen subsequently is a move to the downside on Treasury yields. Not huge on the 10-year, but the 2-year did make quite a considerable move back lower again, and that has affected through US yield differentials with the, say for example here, the Bund under Treasury spread rising, so that has helped to pull euro dollar higher. So you can see that with the across the board on the forex majors, we can see the dollar under pressure even into today's session again. That has continued, and euro dollar back above 12.65. that is a key level. You've seen dollar yen sharply lower. Actually, the big move on dollar yen really has impacted on the chart analysis there. I'll talk through all these charts in a bit, but not only that, we saw gold rallying of over 20 bucks yesterday, and a really sharp move to the upside suggested that the gold volatility just continues, and the outlook has certainly improved again on gold. Not only that, you've got equity markets across the board, European session showing gains. You had the S&P 500 pulling above 3,000 for the first time ever yesterday in that session, although closed back underneath. Certainly a break above 3,000 is obviously seen as a key level there for the States. So a really strong moves we're seeing on equity markets. Futures for the US again 0.2% higher there or thereabouts, so helping markets today. We've also seen some sharp moves around on the oil price yesterday. Oil gained around about 4% on WTI, breaking out to what, about a 6-7 week high, but that coming on a whole range of issues. You can obviously talk about the dovish demand positive aspect of the Fed Powell's congressional testimony, but then also there's a supply disruption in the Gulf of Mexico, and also this incident in the Strait of Hormuz with the UK tanker coming under pressure, under threat from Iran, and the whole geopolitical issues surrounding that. So oil price rallying strongly higher yesterday and continues higher today. So in terms of data points today, because of what we've seen from Jerome Powell, the inflation numbers for the States this afternoon are going to be important. You've got CPI in the States, and it's expected to be 2%. For the core CPI, so staying at that 2% level. But if we see a downside surprise on that, we could certainly see further moves for against the dollar, and the market starting to price in the prospect of a 50 basis point rate cut again coming back into play. So about 30% down, up from around about 0% yesterday morning, now standing at around 30%. On probability on the Fed funds futures for a 50 basis point cut. So that really does put the pressure on inflation data, considering what Powell said today. So how that inflation numbers comes out will be crucial. We've also got weekly jobless claims, which is expected to be around about where we have seen it in recent weeks, around about 225,000 jobs there. Claims there. So Powell is into day 2 of his congressional testimony today. You don't tend to see too much movement around the second day, because it's he basically is reiterating what he said yesterday. Okay, so my charts today, lots to get through obviously, but charts today is the dollar Canadian. Now what we've seen is a really big volatile move yesterday in the session. Not only did we have a dovish Powell, but we had the Bank of Canada coming out with monetary policy, and you can see that through the chart here. We see that through the chart here. That was the initial Powell move. Then the Bank of Canada decision came out at 3 o'clock yesterday afternoon. spiked higher on dollar Canadian as the Canadian dollar weakened on the prospect of actual rate cuts coming through potentially on the Canadian dollar. So we have seen a lot of volatility, but you can see here that the range continues. The range continues between 130.35 and 131.45, this resistance that we've got built up over the last couple of weeks, which is actually a pivot around 131.45. So we are still in that pivot band, but you can see the momentum indicators. Are they starting to find some sort of a bottoming effect? Well, I think if that support at 130.35 on this initial dollar weakness move, if that support survives, and that is an interesting basis of support there holding. And we've got today the bit of a consolidation into today's session. You've got the momentum indicators on the hourly chart still holding around that 30 mark on the hourly RSI. Is that about to show a bull cross on the MACD lines as well? These are all technical indicators that could suggest that we are again bottoming within the range. As I said, that initial basis of support around 130.35 is key. So if you see a closing breach of that, that really does open the downside again. Obviously 130 big figure comes into play, but beyond that, 129.20, 129.10, 129.20 is a key factor, and then 127.80. So this support at 130.35 looks to be a key test now for this dollar Canadian. So I wish you good luck in your trading today. Please click to subscribe to our videos, and also you can go onto our website and join me for my trading webinars, which I've got another one this morning for. So I wish you good luck in your trading today, and I will speak to you later.